Yeah, so thank you to all the distinguished members of the committee for having us here. So my name is Lauren Black, and I am originally from Connecticut. I grew up in Newtown. My family's been in the Danbury area for over 100 years. And, I'm happy to be back. I lived in Los Angeles for about 15 years. And during the COVID pandemic, I was pregnant. I had a 2-year-old at home, and Jonathan and I started thinking about what we could do to be closer to family. And we decided to move to Connecticut, and with the hope that we would be able to take advantage of the tax credit, bring business here, and continue our work in Connecticut. And my career has mostly been in reality television, and I'm really happy to say I've been able to keep working in reality television for Connecticut companies. I've worked for both Lucky 8 and Anomaly Entertainment, both of which are based in Stamford. And so I'm working right now for a Connecticut company that I believe hired me in part because I'm in Connecticut. So it's been really nice being able to move from Los Angeles to Connecticut and continue my career in the industry and support my family in the state. So that's part of what we're doing here. But Jonathan and I also have a production services company for independent films and television shows. And we've been reaching out to a lot of clients to try to get them interested in coming to Connecticut. And a lot of people don't really know about the Connecticut tax credit, but as soon as they hear about it, they're interested. They want to come here. They want to shoot here. We have a lot of great locations. We have the proximity to New York. And there's this credit that really isn't being taken advantage of to the extent that they can. But a lot of the clients we talk to, the tax credits are part of the conversation from the beginning. These production companies, the studios, the producers, they always factor in tax credits. They have a set amount of cash that they're willing to spend on these productions. And then the tax credits allow them to maximize that spend, that cash. So they're going to go wherever they can get the most bang for their buck. So we're trying to keep them in Connecticut. If we eliminate this credit, then all of that work goes away. We don't have a production services company anymore, because what are we servicing? No one's going to come here.
And want to second that, but what I want to really express right now from the bottom of my heart is there's a lot of people in this room right now that are deeply affected about the way that this film and tax credit in the industry is. And I'm talking about not only from the employees of ESPN or WWE or Lucky 8 or whatever, but all the small little productions. We're figuring that between, and again, I don't have the exact numbers because as I'll mention in a few minutes, how do we get those numbers? But, employees roughly between all the major stakeholders, minor stakeholders, and full-time and gig workers, we're probably looking at about 20,000 employees total. That's direct employees. If you look at indirect employees, meaning, people from hotels, restaurants, and all that, you could upwards of get to 30 to 35,000, even 40,000 that are directly affected by film production. And I kind of want to start off by addressing some of the concerns about the reporting and the numbers, because this has been a hot topic. And Chairwoman Horn and I have had a couple of conversations last year, and I've, Mr. Chair Fonfara, him and I've had conversations, and really it's the numbers. And for you guys to really look at this credit is how do we evaluate the production all the way from the top big stakeholders to the little guys. Mentioning little guys, we're a little, we're middle class. We're raising 2 little girls, and we have a middle class home, and we have we employ on our next production 135 employees on our next production. We will spend the budget will be about 3.2 million, or our labor spend will be 1.7 million. But here's the fun catch: goods and services 885,000, hotel spend 76,000, car rentals and truck rentals 110,000. Food and catering, 69,000. All of those are taxable. So you're not only looking at the actual employee taxes, but you're also looking at everything we do is taxed. On top of that, this also affects people in the community. But what I want to really address is the report. So DEDC has been trying to evaluate this credit for many years. As we've heard in, obviously we're in opposition of this bill in 5110, but there's been support of the bill. The problem is they're not getting the correct numbers. They're not correctly evaluating this credit. And I'm going to tell you where to get those real numbers at. You want the real numbers? Very easy place to dig. And that is each production, including ESPN and including our smaller productions, all have to go by a third-party audit. And those third-party audits have a cost report. And each one of those cost reports accounts for every single penny that's spent in the state.
You've
And-
reached 5 minutes for a panel. Please summarize.
And to that point, those numbers reflect that the reports from DEDC is incorrect and it's not fully captured. And I want to leave it with this. The actual profit right now, as DEDC reported, is a 4-to-1 ratio, a 4-to-1 ratio. And that is from the economic report that the DEC put out. But I would love to answer any questions as I have in-depth research and knowledge in this whole area. So happy to help.
Representative Horn.
Thank you, Mr. Chair, and thank you, both of you, for being here. I was thinking to myself, like, married an LA boy and brought him to this small state, but anyway.
I married a Georgia boy,
Georgia.
you know, I met him in LA and then brought him here and he loves it here. He wants to stay here. We want to build our business here. We want to be in Connecticut. We love our community and, you know, this is a great state to live in and raise our family in.
So, I'm sure there are many who have questions here. This is thank you. But one of the questions I wanted to ask is, setting elimination aside, I'll let other people ask questions about that. It obviously is a big part of our tax expenditures. And so I first just want to say it is our job to continue always to look at that. And I know you've both been very helppful in the bill last year in terms of trying to figure out a better way to get better data about this so that we really understand the economic impact of these, because I think it's important. These are, you know, significant resources we spend on this. It has been pointed out to me recently that we are certainly one of the few and possibly soon to be the only state that doesn't have a cap of some kind on these credits. Do you have thoughts on that? Is there any cap that you would, I mean, obviously you'd like to maximize whatever you're getting, but
Yes,
Go
you're
ahead.
correct. Georgia has a problem. They have no cap and there's some negative reporting on Georgia's numbers right now for that reason. So to address that, yes, and people in some of these industries and some of the stakeholders might have a little bit of an issue with this, but let me tell you what I think personally should happen is if you do a 4 to 6 year study from the time that we start with the new reporting. So we start with the new numbers. Let's get the real numbers. It takes 4 to 6 years to do what I call a full-fledged economic impact report. It usually takes that long for it to all trickle down. And at the second part of that is that at that point, let's reevaluate it because we have to balance the respect of the taxpayer's money. I'll be the first one to tell you, we are a taxpayer. I want to respect everyone in this room as a taxpayer. There needs to be guardrails. There needs to be some sort of evaluation, but you can't just put a cap on it without understanding the real numbers and the real economic impact. That's where I think it would be a misguided evaluation of it. So I think the most important value in this is, as I mentioned in my testimony, that's why we're saying bring back the Film Commission, because there's evaluations the Film Commission could bring and explaining this and taking the DECD numbers and working with both sides of the opposition and support of this and really come up with a really good program that could go to 4 to 6 or 8, 10 year out. So I mean, I do think that there has to be a respect and a guardrail, but I think we need the exact correct numbers before we even get to that discussion.
thanks. Yes, it is. The data's a little hard. I think we're getting better, but it has been hard to nail down. We had testimony earlier about, you know, the sustainability of the business. In other words, is this, are we propping up a business that can't survive on its own? Or, you know, is there perhaps a difference between the investment we might make as a state in a business we're trying to bring here versus one that we're trying to maintain here? I wonder whether you could comment on that.
Is Disney a business that can't sustain itself? You know, the thing is ESPN's owned by Disney. You have NBC Universal. These are big corporations. And so it's not that they can't survive on their own without these tax credits. It's that they factor in the tax credit as part of their business model. And if our tax credit goes away, they're just going to go someplace else. I mean, that's just like, it's a business decision to them. I mean, Bob Iger at Disney has been making a lot of moves to consolidate the business. If it's cheaper for them to go to somewhere else, if they're going to save billions or millions of dollars, they're just going to do it. And then, you know, so we have to have these tax incentives to keep these businesses here and to encourage them to invest more in the state. If there is no reason for them to be here, I don't think they're going to stay.
I would also second that, but I would say Marvel is a good example of what Georgia happened. So Marvel came to Georgia because of the tax credit. And because they found a better credit in Australia, they jumped. So my point is that it's baked into every single film, television show you guys watch on Netflix. It's built in everywhere. So they're just going to go to a different state. There's no way to sustain it. But I do think that there's some necessary evaluations that we can manage it, but it will not sustain. You will lose probably 20 to 30,000 jobs very quickly because they're just going to go to New York or New Jersey or Georgia.
And it's also, you have like taken ESPN, you have a very specialized skill set. These are people who are sports reporters and sports editors. If ESPN leaves, what kind of jobs are those people going to get in Connecticut? Are there going to be other jobs for someone who's been editing sports videos for 20 years? Are they gonna be able to stay here? Are they gonna be able to stay here and make the same amount of money and pay the same level of income taxes and be able to support their mortgage and their house here if those jobs don't exist here anymore?
I would mention too, UConn. We've been in talks with UConn about the expansion of their film and television program and looking at building sound stages in Stanford and then kind of marrying that with a training stage. You have to realize a lot of these university programs they're losing. Their retention is poor because they're all going to New York, they're going to New Jersey, they're going to Atlanta. We can't even keep our own kids in the state. And that's also billions of dollars being invested in education. We're trying to augment that, help train and develop people and keep them working in the state.
Thank you. I will abide by my self-imposed 2-question limit, as I'm sure others have questions. So thank you, Mr. Chair.
Before I turn it over to Representative Cheeseman, there's a rule about signs, and while I'm not offended, I don't know, maybe others are, but it is distracting, number one, and it can lead to other days where we have big placards or people holding banners, and how do we distinguish between, well, we like those film people, but we don't like you. So I would ask that you not display the signs. You've gotten your point across. Representative Cheeseman.
Thank you. Thank you for coming here today. Representative Horn asked about the cap which currently does not exist. 2 questions for you. Our current minimum expenditure is $100,000 to qualify for a 10% tax credit. What if we were to raise that limit to require really larger investment in terms of a project in order to qualify for the tax credit?
Yeah, well, currently right now it's the 1 million for the 30%. And I want to note that, and you guys are probably aware of this because we talked about the transfer rate. It's not a real 30%. So the productions and studios do not receive that full 30%. That's a whole nother conversation. But to answer your question is, yes, you could raise the limit, but the problem is you need these smaller films because they're training. That's how a lot of these bigger studios, they will go into an area and take some independent filmmakers that have done a lot of these smaller movies, and they'll train them and they'll put them in bigger films. So it is kind of like an educational training, because everything that we do in this industry is like more like a tech, kind of, I would say more like a manufacturer, if you will. So they need a lot of training, a lot of development, and those lower budgets help build that and help build the infrastructure. The $1 million threshold is, I think, necessary. I think it's important. You could even raise it higher, but then what I would suggest is looking at the region, because as Lauren mentioned, these studios look at every single one of the states and go, which one has the best tax credit, and that's where they're going to go. And who has the infrastructure, and that's where they go. So hope that answers your question.
All right. Second question. What about eliminating the transferability of the tax credits? I know Representative Farrar raised this question before, that according to DCD, in 2023, 36 certificates were issued, 28 credits were transferred to 85 other different entities, only 20 of which were in Connecticut. So if we're arguing the purpose of the tax credit is to help you create jobs, raise up a Connecticut industry, train new people, it seems counterintuitive that then transferring the credits to insurance companies and others who are out of our state doesn't seem to make sense in view of the goal you were stating. So what's your read on that one, please?
I absolutely agree with you. Absolutely 1000% agree with you. And the reason I say that is right now, we're shooting a film with Bob Yari. If you guys are familiar with Yellowstone, he's going to be shooting a film here and we're trying to convince him, but I had to do a budget and there's a 12% discount on the credit. So he's getting 88 cents on the dollar. And the other percent is going somewhere else. So yes, I totally agree. And to everyone that says, hey, let's eliminate the tax credit, I say eliminate it, go to a rebate.
And to piggyback on what Jonathan said, as I said before, these productions, these producers, they have a certain amount of cash that they are willing to spend, and that is a set number. So if you eliminate the transferable part of the credit on this production, that's $100,000 or more that would be spent in the state, spent on the production.
So that's the point, is if you really want to address that issue where all this money is going out of the state, the one way to do that is get rid of the transferable part of it, make it a rebate, which will then put us at the 30% would be the most competitive program on the entire East Coast. And that would then, I talked to Paramount Studios 2 days ago, and when I told them that, the very next thing they said is, you got us, we'll commit to multiple years in the state with large productions, because we would be able to beat all the states around us. But it's a real all the money would go back into the state. It would be spent here, not going outside. And I totally agree with that. That's why I'm saying change it to a rebate.
And then when you have these productions, these television shows that come in and they say it's going to be a multi-year commitment, then you can invest more in infrastructure. You can
Correct.
build more sound stages. You can attract more people who are going to move into the state to work here, like what happened in Georgia.
Okay, thank you. And just a comment, if people have referenced Georgia, I see a report in 2023 from their Fiscal Research Center that says going forward in 2028, I guess, Georgia will, in net fiscal effects, will lose $1 billion on their tax credits. So
And I totally agree with that. And that is actually pretty accurate. And that goes back to what, Chairwoman Horn was saying. That's why the Film Commission is so important to bring it back, because we don't ever want that to happen. So we basically want to be able to craft a correct program to do what it needs to do to create jobs, bring more businesses here, but sustain it and then respect the taxpayers' money. So that's why you'll hear me, and I'll probably email to all of you guys about the Film Commission coming back, because we'll do that work for you guys and we'll have everybody represented on both sides. And then I think we can keep that from happening. I respect everyone's money and we pay taxes. I don't want to have anyone in this room to feel like we're just throwing money away. I want it to be valued. And that's the important part, is just carrying and taking the responsibility.
well, I'm happy to hear you're appreciative of the need to respect the taxpayer dollars and
Yes.
looking at this salutary lesson from Georgia, because we certainly don't want to be in that boat. Thank you so much for coming today. Thank you for taking your time. Thank you, Chairman.
Thank you, Representative Farrar.
Thank you, the chair. Thank you both for being here. I know my colleagues asked some really valuable questions, so I won't repeat theirs. I did just have a question, because I know one of the things has come up in the committee in the last couple of weeks and the last couple of years, particularly with this tax credit, is because it was established so long ago, it really has meant that, we have to keep kind of looking at the credit in reference to, is it serving its purpose, right, as it was intended, and is it still serving its purpose today? And one of the things that I just wanted to ask you all about is, I know that this tax credit, again, we get much of the information around usage from DCD. Are you all engaged in any sort of other program, or have you sought support from DCD or the state in any other facet of your work?
Meaning the tax credit programs or other programs?
Other programs, just be helpful to know if there were other programs or other opportunities that you've engaged with DCD to pursue support.
No exception for the educational side, where we've been trying to work with educational, opportunities. But to reference that, no, we were looking at this solely on the film credit, because that's the way that the industry is structured. So if there's other programs that we could sell or market to other corporations or other producers, the like, to make us more competitive, absolutely happy to look at that. I think the most important thing, and if you don't mind me speaking to this, this is a heartbed of the conversation and debate, is the real numbers. And that's why I'm stressing to you guys, every single production has to go to that third party audit. And to rebut what the opposite side is saying, it is profitable. And I could do a 6-to-1 or 7-to-1 ratio if we are looking at those third party audits and what's being spent in the state. That's the thing that I think is lacking from the DECD's report, is in the weeds. And that's where we want to help out to show you guys those numbers. And that's why we fought really hard last year to have the reporting, the extra reporting, to start looking at those numbers.
Yeah, thank you for that. I just appreciate knowing what your engagement has been more holistically with DECD, because we do rely on them to come forward to us with kind of the best approach from economic development. I know there's been a number of programs that we've supported over the years that have sought to do that and have adjusted themselves, such as the Job CT program, et cetera. So we're encouraging growth.
Yeah, and I apologize. There's one very specific thing about the industry's changed. You guys, the strikes have decimated us completely. I lost 2 productions last year because of the strikes. Almost every single person sitting in this room was, unemployed for multiple months. And what we're trying to look at is how we can keep things going, even when there is a strike and even when there are opportunities. So that's when we're also saying, lift the moratorium on, theatrical films, because that would also bring more business into the state, et cetera, et cetera. I just want to just aware of that there's a lot of people in this room that have been struggling pretty hard.
Thank you. And just a second brief question. I don't know if it was including your testimony. I know that productions ebb and flow, but do you all have kind of an annualized average number of how many employees that you might have on an annual basis?
Not on an annual basis, because it does flow back and forth. I'm going to tell you right now what we have on our slate. This will actually, it's in my testimony, but I think just for the record, right now, our first production coming up, I have 135 employees. My second production, I'm going to have 225 or 255 employees. And my next production is going to have 185 employees. That's going to be over probably much of the year. So, to do the math there, but I mean, it's a lot of people that production's employed. There are gig workers, they're part-time workers, but they get a decent salary, and that salary sustains them when they're a hiatus or they're not working. So.
Thank you for that information. Thank you, the chair.
Thank you, Senator Wong.
Thank you, Mr. Chair. And in this building, we have a lot of meetings going on. So I thank you, Mr. Chair. I'll try to earn my stripes and do my best here. But Lauren and Jonathan, good to see you. But it's amazing to me, how did we go from asking for more tax credits to where we are, where you're struggling with the elimination of this? It's got to be bewildering to you.
It is. And I think what has been frustrating for us is the lack of information and education, and to the lawmakers yourselves and to the different committees. And I think the importance of this is we've been fighting to bring business here. I mean, we're trying to bring business into the state. I'm working currently to try to build sound stages in the state. And I'm doing that to create brick and mortar, real long-term investments. And so that was the idea. And then once this elimination comes across the board, frankly, it scares everyone. They lose trust in the state. And I'm talking about the current stakeholders lose trust in the state. And it's very hard to talk to these producers and say, but come here, please. And so it is disparaging. But I would say this, we really believe that there's the arts, the community in the arts help people even when they're struggling. When you're in depression or you're in economic hardships, what do you usually go do? It helps you to escape to watch television. All of us watch television. All of us watch movies, and all of that money goes to Hollywood. Why can't we bring it back to the state?
I appreciate that. And I think it's important knowing both of you and your decision and commitment to be Connecticut residents.
Yes.
When you could do your business elsewhere. Newtown's a great town to be in. I know that. But I think the key point to that is when you bring production, when you showcase the state of Connecticut in your Hallmark shows and the various others, it is almost kind of an unacknowledged dollar of tourism.
Correct.
I think we have made a commitment to support tourism
Correct.
in Connecticut as a revenue generation. Give me some of your thoughts. And I know for me, there are residences in my district that have hosted the famous Hallmark Christmas shows.
Right.
and people flock there. People identify Connecticut as the beautiful, wonderful communities to live in. That is more than any dollar of tourism and marketing we can provide. So talk to me about what having production and the showcase of our beautiful communities from Essex to Newtown to Southport. What does that mean in tourism dollars and the prestige of Connecticut relative to anywhere else in the country?
That's a great question. I like the whole Make It Here campaign. Make it here as in production, but also make it here, make it your travel destination. Make it here to live here. So yes, it does showcase. I will tell you from an example, I just did some scouting in, Chairwoman Horn's district, and the director said, you know what, I think I want to move to Connecticut because it's so beautiful here. And what we do is we showcase. Why do you think Mystic Pizza? I mean, Mystic Pizza is permanently on the map, and people go to Mystic for that very specific reason. But I will also tell you, the tourism has done tremendously great jobs. On my Facebook, I get all these ads, right? And I'm like, gosh, can we just do that and tie that to the film production? And then all of a sudden, you've got bureaus and tourism. And on top of that, I have actors and people coming out of the state that want to come back and visit Connecticut and stretch their legs and vacation here. Because that's not including what we would see as like my parents or anybody else watching the television and what they see. So yes, I think it's hard to even equate the numbers. It's marketing the state visually, which is we're a location state. Just have you guys know this, that since we don't have any Class A sound stages that would support large TV shows, and which we're trying to do, a lot of people come here to shoot for the location. I have the film right now that's shooting here, and it's set in Canada, around Niagara Falls. And guess what? I convinced them to shoot here. So it's pretty cool that we can showcase Canadian look and shoot a Connecticut film. I have a football movie that wants to shoot here. And guess what they want to do? They want to shoot in Newtown High School, which won the football championship, I think, 2019. And they love the community. I'm sharing these photos to millions of people, marketing it, not only to shoot the films, but to visit here. So
I think that's the challenge, right? Is these are not tangible dollars of consideration. Now, for that producer, we would encourage them to move into Connecticut and into Representative Horn's district. It's a beautiful area.
Yeah.
But I need you to understand part of the challenge that we have is we also want to maintain an affordable Connecticut.
correct.
And that we need to evaluate and judiciously look at every tax credit that we give
Absolutely.
because it's less money in. And I think that's the twix of this and the challenge. However, I think what may be helpful to this committee and the legislature is if you had residual dollar values of financial contribution, site locations in which businesses can document their growth in business volumes, and the tourism boards of your respective towns that you've had a site location, and to get incremental increases on tourism. Look, my wife saw Mystic Pizza 25 years ago. She still visits it every time we drive by in hoping that she catches Julia Roberts. But the reality ultimately is you don't have measurable metrics. And perhaps maybe the industry should do a little bit more that when you go to a site location, unless you have them.
We do. And this is where I want to get to the point, and I've been driving this, is because of the third-party audit that DECD requires. And that means every single person that gets that credit has to do a third-party audit. So you can address those numbers. The numbers, what they do is they drill down in how much money they spent renting houses, how much money they spend at all the restaurants, how much money each person gets per diem if they don't live here. That's $420 in cash. That gets accounted for. I mean, I'm talking about every single penny gets accounted for in the community and also where in the community. And that is also something you can look at, how many films shoot in a certain community. And you can then say, okay, what about communities that don't receive as much production? Like I'm using Bridgeport might be a good example. And they could see it, we could look at helping them get more production, but those numbers are measurable. They are there, and every single one of the productions, and this goes back until 2007 when the credit was created. And guess what? They have papers and they have boxes of reports, and then they have it electronically. So it's there. And I would happy to sit down with anybody. That's why I'm saying the film commission's important, because we could sit down and walk through a cost report. So you can see where every single penny is spent. And I can show you the addresses of all the locations. And then we can start looking at the tourism side of that.
And if you could, through to the chairs and the rankings, if you could share that, it'd be important. But I'll close and thank you, Mr. Chair, and Madam Chair, is ultimately your industry has survived through COVID and then the aftermath of the industry strikes. I know many of your men and women are struggling. And this would be another blow that would force you to move. And we want to keep Connecticut businesses and Connecticut residents in this state. But ultimately, I think there's been mention about Georgia and some of the challenges with Georgia. But I would also ask for those individuals to also look at where Canada has really grown in supporting the industry. And you know, Canada may be a great place for you all to visit, but it's a long, long way from home. So again, thank you, Mr. Chair. I appreciate the indulgence, and I'll look to earn more of my credits back. Thank you. Thank you, Jonathan and Lauren.
Before you thank us, the rule we have here, Senator, is once you ask your questions, you cannot leave until we're done for the day. We like you more in person. Mr. Black, I suspect not everything is relative in terms of the filmmaking industry, but I can't believe that you can't, you've told us that the data is there, the audits. But with respect to other states that have had data to support in those states, their tax credits, that we can't deduce from that information what the value of making films and other productions here in Connecticut would generate. I understand that you're saying the information is there and we
Right.
ought to take advantage of that, but I can't believe there aren't some apples to apples with, maybe California has a different thing. Maybe Georgia has a different reason why folks go there. But in terms of what the activity generates and spins off in terms of revenue and or expenditures, that we can't use some of that data or you can't use some of that data to help us as we work through this.
No, because I would say yes and no, because a lot of the states have the same struggle that we're having right now. Okay, Georgia has it, you know, New Jersey has it, New York has it, Massachusetts has it. A lot of states have struggled to try to do this, and there's a very specific reason why. Because they have an economist or an accountant that is not an industry expert that tries to disseminate how our cost reports and how our money is spent. But if you put an industry expert in the room and you put an industry accountant in the room, and they understands the cost reports, we could actually be a leading state on how to actually do these reports. There's a way to do this, and we could be the leading showcase to do this. A lot of states have struggled. I mean, Georgia has tried over and over again, but the complexities of how money is spent in a production, it's so vast and far and wide that you have to have somebody that really understands the industry language and how to understand to read these reports. And that's what I think has lacked, is having industry people involved in actually breaking this down. They usually hire an auditor that doesn't really understand the industry, or they're not an expert. And that's where the default has been coming from.
That's, I
Sad.
mean, I could hear the refrain, the fox in the hen house kind of thing, that you're asking people who are already committed to an industry to do the analysis as opposed to something more objective. And
Actually, they are willing to do it. And the reason why is because these productions are used to being audited anyways. They go through a third-party audit. I will spend probably a good solid week on every one of these films, you know, preparing the audit. And when I do that, preparing the audit, if I were to be able to sit down with one of you guys for an hour, I can explain things that you've never heard of in the way that we use our money and the way we spread it out around the communities. So those are the things that yes, there is a trust factor in the fact that you need a third party, you know, objective person. That's fine. but they need to understand and be educated in exactly what the industry and how the industry uses money.
Thank you. Anyone else? Thank you both.
Thank you.
Thank you very much.